I think people are feeling a little bit more comfortable with the market conditions.
This realtor says she's had more renters reaching out over the past few weeks looking to finally make the leap to homeownership. That's due to a price drop that makes ownership more affordable for more people.
With where prices are, it's become a little bit more attractive for people to get in to buy their first home.
In the first half of 2024, 82% of investors who owned newly completed condos with a mortgage were losing money every single month. That number is up from 77% just 1 year before. And right now in February 2025, this problem is getting worse, not better. Toronto's condo market is facing its biggest test in over 30 years. And it's not just investors feeling the pain. Sellers are watching their equity vanish. Renters are seeing their monthly rates drop by hundreds of dollars. And first-time buyers are finally getting a shot at units they couldn't touch 2 years ago. This isn't a theoretical crisis anymore. Real people are dealing with real losses, real opportunities, and real choices that will define their financial future for the next decade. Let's break down exactly what's happening. Let's start with the sellers, because this group is facing the toughest situation. Anyone who bought a condo between 2022 and 2023 is sitting on a loss right now. The numbers are brutal. Average condo prices peaked at $790,398 in the first quarter of 2022. As of the first quarter of 2025, that same average is down to $680,146. That's a 14% drop from peak levels. And according to TD Economics, prices could fall another 15 to 20% before this correction is done. Let me tell you about Nizar Tajdin. In spring 2022, he put down a 10% deposit on an $855,000 pre-construction condo in Toronto's Forest Hill neighborhood. It was a 468-square-foot one-bedroom unit. He never planned to live there. He wanted to flip it through an assignment sale before construction finished. But the market collapsed. By the first quarter of 2024, average condo values had dropped nearly $100,000. His realtor stopped returning his calls. Other agents couldn't find a buyer. And as his closing date approached, Tajdin was stuck. This story is playing out across Toronto right now. Here's the problem for anyone trying to sell today. New listings in Toronto surged by 25.2% in the first quarter of 2025 compared to the same time in 2024. There were 14,544 new condo listings competing for buyers. But sales dropped 21.7% to just 3,794 transactions. The market flipped overnight. It's now a buyer's market with 7 months of inventory sitting on the market. John Pasalis, a Toronto real estate broker, put it simply on CBC's Front Burner podcast. We have a lot of supply on the resale market, but supply that a lot of people just don't want to buy at today's prices. For sellers who bought at the peak, the math is painful. If you purchased a condo for $800,000 in 2022 and try to sell today, you're looking at a price around $680,000 or less. That's a $120,000 loss. Factor in land transfer taxes, realtor fees, and legal costs, and some sellers are walking away with nothing or worse, owing money to close the sale. The situation got messy fast, and everyone's watching what happens next. Now let's talk about the landlords, because their situation is just as bad, maybe worse. According to a July 2024 report by CIBC and Urbanation, 82% of investors with mortgages on newly completed condos had negative monthly cash flow in the first half of 2024. The report called Toronto's condo market recessionary territory. Here's what negative cash flow means. The rent coming in doesn't cover the mortgage, condo fees, property taxes, and other costs. These landlords are topping up hundreds of dollars every month just to keep the lights on. Let me break down a real example from industry data. An investor bought an $800,000 condo in 2020 with a 20% down payment. Back then, mortgage rates were around 2%. The monthly mortgage payment was $2,710. Fast forward to 2025. That mortgage comes up for renewal. Current interest rates are sitting at 4.5%. The new mortgage payment jumps to $3,569. That's $859 more per month. But rents didn't keep pace. Investors who closed on condos in 2023 had an average negative cash flow of $597 per month. That's up from $223 per month for those who closed in 2022. And about 30% of investors are losing more than $1,000 per month. Condo ownership costs went up 21% in 1 year. Meanwhile, rents only increased 8%. The gap is crushing landlords. Benjamin Tal, deputy chief economist at CIBC, and Sean Hildebrand from Urbanation wrote in their report, the GTA condo market is in a state of economic lockdown. The math doesn't make economic sense from both the demand side, investors, and the supply side, developers. So what are landlords doing? Many are selling, and that's flooding the market with even more inventory. Vacant condos listed for sale increased by 56% in 2024. Investors are backing off, and the market is absorbing all this pain in real time. The tone shifted fast. No one expected it to fall apart this quick. Look, I'm tracking every single price drop, every rent change, every new opportunity in Toronto's market. Subscribe so you don't miss the next move that could save you thousands. Now let's flip to the renters, because this group is actually winning right now. After years of rent increases that felt never-ending, the tide has turned. Average apartment rents in Toronto fell 7.1% in 2024 to $2,632 per month. That's a sharp contrast to 2023 when rents went up 2.1%. For a one-bedroom, unfurnished unit in Toronto, the average rent dropped $162 year over year as of June 2025, sitting at $2,078. Downtown rents fell even more sharply. And for the first time in years, renters have negotiating power. Errol Pollockpool, a real estate agent with Harvey Colley's Real Estate, told CBC that tenants are now asking for lower rents and demanding specific improvements. The tenants who are moving and are asking for more things like new paint jobs or certain appliances to be changed. Both sides have sensed that there's a change in the market. Why is this happening? 3 big reasons. First, supply surged. Condo rental listings increased 16% year over year. Investor-held rental supply is flooding the market. Developers who couldn't sell units are putting them on the rental market instead. Second, demand softened. The federal government reduced immigration targets from over 485,000 permanent residents to 365,000 by 2027. Fewer international students are coming in due to study permit limits. Fewer people are moving to Toronto. Third, landlords are desperate. According to reports, property management companies like Maple Leaf Property Management were offering 3 months of free rent just to fill units. Some buildings are offering $1,500 signing bonuses. One Twitter user called it desperation in the air. Renters, especially students and young professionals, are finally seeing relief. For someone who was paying $2,800 a month last year, a drop to $2,500 or even $2,300 means hundreds of dollars saved every month. That's real money back in people's pockets. But experts are warning this won't last forever. Once the supply gets absorbed and new construction slows down, rents could swing back up. Right now, though, renters have the upper hand. Finally, let's talk about buyers, because this might be the best opportunity they've had in years. First-time buyers who were completely priced out during the peak are now re-entering the market. Condo prices in Toronto have dropped nearly 20% from the 2022 highs. Units that were selling for $800,000 2 years ago are now going for $650,000 to $680,000. Here's what's really changing. Condos under $400,000 are back. In 2025, 16 condos have already sold for $350,000 or less. Most of them are bachelor apartments, but 3 one-bedroom units also sold in Toronto's core for under $350,000. Devin Glowinski, a sales representative with Property.c, said it's like time traveling back to 2019. And it's not just micro units. For around $400,000, buyers are finding one-bedroom condos in good locations with generous layouts. According to reports, buyers now have massive negotiating power. With 7 months of inventory sitting on the market, sellers are accepting offers below asking price. Some listings are sitting for 40 days or more. Andrew Bibby, Toronto real estate agent, told the Globe and Mail that during the pandemic, it was hard to find a unit downtown for less than $600,000. Recently, a one-bedroom condo with a terrace at King Street East and Parliament Street sold for around $499,000. There are a lot of opportunities out there, Bibby said. You have a lot of negotiation leverage as a buyer. The best part? Interest rates are coming down. Mortgage payments now make up about 24.3% of the average dual-income household's earnings, down from 31.4% at the market peak. With insured 30-year amortizations now available, monthly payments are far more manageable. But this window won't stay open forever. Ben Myers from Bullpen Research predicts an uptick in new condo sales in 2025 as developers lower prices and interest rates continue to drop. Once the market stabilizes and supply tightens, prices will climb again. Myers expects that could start in the second half of 2026 or early 2027. Right now, buyers are moving fast. The market cooled instantly, and first-time buyers are jumping on deals they couldn't touch 2 years ago. And that's why homeowners, renters, investors, and first-time buyers are all watching Toronto's condo market like never before. Sellers are facing losses they didn't see coming. Landlords are bleeding money every month. Renters are finally catching a break after years of climbing rents. And buyers are finding opportunities they haven't seen in nearly a decade. The market is shifting faster than anyone expected. New condo sales dropped 64% in 2024 to just 4,590 units, the lowest volume since 1996. Prices fell $110,000 from the peak. And with over 31,000 new units expected to hit the market in 2025, the supply wave isn't done yet. This single story exposes just how fragile the market really is. If this is the warning sign, bigger changes could be next. Everyone's watching what happens next.